Hi, everyone, and welcome to our Solo 401k and Self-Directed IRA live Q&A. We're so excited to have you here with us today. My name is Leah with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. I'm here today with Dimitri, who will be answering your questions. Dimitri is our president and founder of Sense Financial. Dimitri began his career in financial planning and real estate investing in 2000 and is a licensed California real estate broker. He holds a designation of Certified IRA Services Professional from the American Bankers Association. And over the years, he has taught hundreds of investors and investment planning seminars and mentored thousands of investors. Welcome, Dimitri, and thank you for joining us today.
Yeah, I'm glad to be here with you. Looking forward to diving into the questions.
Awesome. All right, we'll go ahead with our first question from Rajiv. He is asking, what is the tax liability for a solo 401k?
Well, Solo 401k is a qualified retirement plan, and in and of itself, there is no tax liability on the investments that you make unless you invest in unrelated business. So if Solo 401k makes passive investments, there will be no tax liability. But if Solo 401k makes an investment in a business, then there might be a tax liability, and that is known as UBIT, unrelated business income tax, and that is derived if there is a income from an active business that your Solo 401k receives. As long as you invest in passive investments, there should be no tax liability.
Craig is asking, do you have any documentation on how to use my Solo 401k, and is there any form to track things such as important deadlines?
Greg, to learn how to invest in a Solo 401k, the great resource will be our client portal. Now, how to invest depends on what you want to invest in. If you wanted to simply open a brokerage account, we have guidance. You need a specific type of account for your Solo 401k. You can find detailed instructions on the client portal. If you wanted to buy a rental property, as an example, then you identify the property, you make an offer. It has to be in the name of the Solo 401k. You as the trustee will sign it, and then you follow the normal procedures and take title in the name of your Solo 401k. And other investments will be similar. This is the concept.
Michael is asking, I invested a significant amount of IRA money with a company who is going through bankruptcy, and I stand to lose most of the investment. What is my recourse?
Well, Michael, when you invest your IRA money, unfortunately, every investment comes with the possibility of risk or losing your principal. So it will be the same as if you were to invest your IRA money into a stock. You purchase a stock, and then that stock lost its value, you will be at a loss. So it doesn't affect you personally as far as your personal finances, but your IRA can lose significant amount if you invest in something. So obviously it's important to do your due diligence ahead of time. It's important to diversify so that you don't put all of your eggs in one basket, so to speak. But as far as the recourse, I don't know what kind of investments you've made, and I'm not an attorney to guide you on this. You probably need to seek some legal counsel as to what your recourse might be available for you.
Next question is from Mike. What is the fastest way to load money into a self-directed Roth IRA if I don't have a 401k to roll?
Michael, if you have a self-directed Roth IRA, Roth IRA can be funded there is two ways to fund that. You can roll over funds from another Roth IRA or possibly Roth IRA if you have any, and I believe you mentioned that you don't. So the only other way is to make contributions to the Solo 401k. The contributions are limited to $7,000. If you're over age 50, there is a catch-up that is available for you, but that's pretty much it. There is no way to maximize that other than just reaching your limit. If you're eligible for Solo 401k, self-employed or own a business, then you can contribute significantly more because the contribution limit for Solo 401k is nearly 10 times larger. But for an IRA, once you reach the limit, there is no other ways to load any more funds into it.
The next question is from Judy. Judy is asking, can I reverse my self-directed IRA back to a regular traditional IRA? If I can, how can I do that?
Yes, Judy, you can reverse might not be the proper term to use, but you can roll over or transfer your IRA back to a regular IRA if you have a self-directed checkbook IRA right now. And if you don't have any investments and if you're not planning on making any alternative investments, then you can simply roll over the cash to regular IRA at Fidelity or Vanguard or wherever you wish to hold your IRA or open your IRA. You can certainly do that. The key here is, do you have any assets in the IRA? If there's any alternative assets, then obviously you won't be able to do that because you will not be able to roll over those assets into regular IRA at Fidelity. Fidelity will not accept alternative assets. They'll accept cash only on traditional investments. So that will be the key. But good question. Again, depends on what your goals are. Also, I would like to remind everyone that there is an opportunity for you to ask questions as you listen. You can go to the chat section there and you can type your questions and Leah will read them once we are done with the pre-submitted questions. Be sure to take advantage of that. And I always tell that, hey, by asking questions, not only you will benefit, but everybody else who's on the call or everybody else who will be watching the recording will benefit from those questions. So don't hesitate and ask them away.
Thank you, Dimitri. Judy would also like to ask, can I use my self-directed money to buy annuity? How about RMD?
I suppose you could buy an annuity using a self-directed IRA. It's really designed to invest in alternative assets. Annuity might not be the best option for you, and also depends, as in the previous question, do you have any alternative assets? Because if you don't, then you can just move it to an IRA and buy an annuity, just regular conventional IRA. If you do have alternative assets and you wish to buy additional traditional assets, annuity, frankly, in my opinion, is not the best investment for an IRA because annuity is a tax sheltered vehicle and IRA is tax shelter vehicle. So what you do is you put one tax shelter inside of another tax shelter. So that's not beneficial. You can use your personal savings to buy an annuity, but as far as an IRA money, again, I personally don't think that's the best use of your funds. There are much better options. And if you want to discuss and just kind of, I'll be happy to brainstorm with you. Go ahead and schedule an appointment. And we do offer unlimited support for our clients. While we do not offer investment or financial or tax advice, we can talk to you. I can get to know your situation a little bit better and perhaps give you some guidance.
Next question is from Jackie. How can we pay the least possible on RMDs and earn more on our TSP?
Jackie is asking about the TSP, which I believe you have a tax sheltered plan, I believe. So it's type of a retirement account. It's not a self-directed. So as far as the least amount of RMD, well, you need to calculate what the RMD is. And there is really no, whatever that RMD is, you're going to have to take that amount. So there is really no wiggle room there. You can obviously take more, but you can take less than RMD. But that's something that you got to talk to your CPA to help you calculate. There are online calculators that you can go and search, plug in your balances and your age and see what that amount is. But yeah, there's not much flexibility there.
Our next question is from Jag. How to transfer to a new IRA from a solo 401k?
Well, Jag, it is possible to transfer funds from a solo 401k to an IRA, but it all depends on what your goals are, what it is that you're trying to accomplish. So I will suggest that you, again, schedule a consultation or give me a call directly on my number so that I can take the time to understand what your goals are. The simply answer is that yes, you can do that, depending also on your age, whether you're going to keep the solo 401k or you're going to terminate the solo 401k, and depending on the type of money that you have in your Okay, because there might be some restrictions. But for example, if you funded your solo 401k with a rollover, you brought money in, those funds can be easily taken out. And all you need is an IRA and complete the distribution form, and funds can be taken. Or if you're keeping the plan and you made contributions, there might be restrictions for those. So feel free to reach out and we can guide you on this.
Jack would also like to know how to make your first solo 401k investment.
Well, to make a first investment is you need to identify, you need to decide what it is that you want to do. So that will be the first step, deciding on what investments you want to make. Once you made that decision, then you go ahead and again, we are dealing with the self-directed solo 401ks here. People do invest in alternative assets. Once you identify that investment, then you go, you sign the paperwork. Everything must be in the name of the solo 401k plan. Refer to your adoption agreement and plan paperwork for the exact spelling. And then you must transfer funds for that investment from your solo 401k bank account or brokerage account. And all investment income and returns must go back to the solo 401k. So this is a general guidance for you.
Bill is asking, are withdrawals using the mega backdoor strategy to fund a Roth solo 401k account different from other Roth contributions or conversions?
Oh, Bill, your question is a little bit confusing because the mega backdoor, that's not withdrawals. You're not withdrawing the money, you're actually contributing the money. So I'm not sure I'm following your question. If you're joining us live, you can go ahead and clarify that in the chat. But again, I'm not sure I'm following the question because mega backdoor is a contributions. You're not taking distributions or withdrawals.
In the meantime, we'll be answering the rest of the questions. Gregory is asking, balance of my solo 401k was placed in a small syndicated RE investment. The partners are suing each other, and it is very likely that I will lose the full amount invested. When that final determination is made, will this be handled like any other investment asset as a loss on my income tax?
So Gregory is asking if you made an investment and you end up losing that investment with your solo 401k, how will that affect your income tax? Well, remember that solo 401k is a separate legal entity from you. You're not your 401k and your 401k is not you. And so what investments you make in your solo 401k, they're not your investments. They're investment of the 401k. So if you made a significant gain in the 401k or you end up losing investment in the solo 401k, it does not affect you personally, it does not affect your personal taxes. So no, there will not be any reporting of that loss on your personal tax return because you did not lose anything. Your 401k did. And simply your 401k will end up losing the capital, just like you can use your 401k to invest in the stock market. You can buy some stocks or mutual funds, and those may end up losing value. So you have a loss, but it does not affect your personal taxes. When the 401k affects your taxes is when you're taking distribution. So when you pull in money from the 401k, that becomes your taxable income. You have to now report that to the IRS and pay taxes on that income. Simply losing investment or value of that investment or gaining, receiving income from those investments doesn't affect your personal taxes.
And our last question from the pre-submitted questions is from Atu. I was a discount solo 401k member. How do I get my updated documents?
Well, if you switch to us from another document provider, we help a bunch of people do that over the last few months, then our team, if you completed the onboarding, that's the first step. So once you completed the onboarding, then our team will be reviewing the plan documents. We often found out that certain pieces are missing or certain pieces of information are not there. So we're contacting each and every client to clarify or collect that information and prepare for amending and restating your plan documents. So that's going to take some months to do, but my team will reach out to you, and first we have to collect the information, enter everything into our software, and then once the IRS releases next set of plan documents, we will continue with the restatement process, and you'll be getting the new set of plan documents.
We are now moving on to our live chat, including the questions. Our first live chat question for today is from Ven. Ven is asking, do you propose alternate investments for K or refer us to others that do? Just a note, currently we have K invested in real estate only.
Good question. What we do is we do for the vehicle for you, we provide a self-directed IRA or solo 401k. The key here, it is self-directed. So, no, we do not propose any investments for you. You make your own investment decisions. So we will give you general guidance. We can tell you whether you can or cannot do certain investments, but we're not going to tell you what to invest or vet any particular investments. That's going to be up to you to do.
Ben is asking, can you construct a spec house with investment funds from self-directed IRA? Will it be subject to EBIT tax? A third-party unrelated contractor will be doing all of the work.
Technically, that is possible. You can use your self-directed IRA to build a house. A couple things to note here. You will need to have enough funds to purchase land. Keep in mind that you can't build a spec house using your IRA money on a land that you personally own. That's not going to work. That's going to be a violation, a prohibited transaction, which will disqualify your IRA. So your IRA will have to buy the land, and your IRA will have to have enough financing to pay for the building of the spec home. It might be possible to arrange financing, although it's going to be very difficult. We're talking about construction loan here to an IRA. And as you remember, you cannot guarantee the loan yourself, so the loan must be non-recourse, and it's going to be very difficult, nearly impossible to get a construction loan to an IRA because of the non-recourse factor. So most likely you'll have to finance the entire project. If you do have enough capital in your IRA, you certainly can do that. Now, if you're gonna build it and you're gonna just rent it out and hold on to it as a long-term investment, there will be no UBIT tax implications. However, if you're just building it to sell, then this likely will be looked as a business transaction, and you might be, or the profit from that particular project might be subject to UBIT tax. So you don't want to consult with a qualified CPA for this question.
All right, I believe that is the questions that we have for today. However, we'll wait about a minute longer to see if there's any. Yes, we do have one right now. We have a question from Ed. You are an expert. 1 second. You are an expert, but can't one get a non-recourse loan from a private lender?
Yes, you certainly can get a non-recourse loan from a private lender. You can get a non-recourse loans from an institutional lender. We do have those lenders listed on our website. There's only very few of them that specialize in these types of financing, but you certainly can get a non-recourse loan from a private individual. I've done it myself both ways, and you can do that as well. And the lender can be an individual that you know. It can be actually a retirement account. If you know someone with money, let's say you're trying to finance purchase of the property in your self-directed IRA or 401k, and you know someone else who seeking on some unused cash in their retirement account, they can potentially set up a self-directed IRA or 401k, and that retirement account can lend to your 401k as another course loan. So yes, that is possible. Great question.
We also have a question from Van. We have a Roth IRA at Morgan Stanley, and can that be transferred to the Solo 401k or Roth for alternative investments, as they have it in stocks only now?
An Roth IRA cannot be transferred to a solo 401k. So that's the only retirement account type that is not allowed by the IRS to be moved into solo 401k. Solo 401k can be funded with rollover from any other retirement account except Roth IRA. So if you do have existing Roth IRA and you wish to self-direct that, then your only option will be to establish a new self-directed Roth IRA, which is possible. We do it every day for our clients. And then you can roll over your existing Roth IRA at Morgan Stanley, I believe you said, into a new self-directed Roth IRA, and then you can invest in alternative assets from there. But that's going to be completely separate from your existing solo 401k. If you had a Roth 401k from your previous employer, okay, can be moved to Roth solo 401k. But it's the Roth IRA specifically that IRS does not allow to be moved to a 401k.
And we have a next question here. What if there was fraud involved in your investment?
Well, if there is a fraud involved in your investment, then you probably need to get an attorney involved. I can't help you with that question because I'm not a lawyer. We don't handle fraud or investments. So I don't know what your options are there. As far as recovering your investment, you might have that. I'm familiar a few instances. I spoke with several clients who were in similar situation, but you'd have to go and seek legal counsel as far as what your options are recovering that investment.
And I believe this is our last question for today from Bill. If the Roth 401k was funded through a mega backdoor conversion, are the future distributions taxed differently?
Well, if you have a Roth can you funded that with mega Roth contributions. Well, those are after tax contributions. You pay the tax on them. So if you take qualified distributions from the Roth, they will be tax free. So you should not be paying any taxes on those. Yeah, so you will have to wait 5 year period on the Roth, and obviously you have to be over retirement age. But if you meet that criteria, then your distributions will be qualified and there should be tax free.
All right. And that wraps up all of the questions that we have for today. Thank you so much for everyone for joining us. And thank you so much to Dimitri for answering all of our questions. We will see you next time on our next live Q&A. And yes, that is all for today. Anything that you'd like to add, Dimitri, before we wrap things up?
Leah, thanks so much for helping me with this today. Thank you all for joining us and for the questions. Great questions. I always enjoy learning something new about your situations there. If I wasn't fully able to answer any of the questions, feel free to reach out to us directly, because sometimes the question might be a little bit confusing or not full. Obviously, you're asking from your perspective, but in order for me to accurately answer that, I have to look at it from my perspective. So I need to understand the questions. Feel free to reach out to our office and for any further clarification. But thank you again for joining, and we will see you next time.
Thank you, everyone.